Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're coming at you with a midweek update. But before we jump in, if you enjoy this video or you learned something, please just leave a like on it as it really helps out my channel. And then, of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos. And then there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so that you can go back and watch episodes over time, learn about the industry as it evolves, identify some top companies that you keep seeing pop up, and then take advantage whenever you are ready. But today we're going to start with Canopy Growth as they reported their first quarter and fiscal year 2021 financial results. And we're going to use this as a side-by-side comparison to show you the difference in management styles between Canadian licensed producers and US multi-state operators, and just to show how much more expertise seems to really be concentrated in these US multi-state operators, and how the Canadian LPs just did not necessarily deliver on promises that they made. But Canopy, for example, they do have Constellation brands backing them, so they have that cash cow behind them that's going to allow them to make mistakes and lose money before they end up improving their operations to make money. Nonetheless, we're just going to jump in though, as they achieved 37% revenue growth in fiscal year 2021 with strong double-digit growth across both cannabis and other consumer product businesses. Improved supply chain execution and quality enhancements are leading to commercial success for the business, while they claim to maintain their #1 market share of the total flower category in Canada. Not too sure about that. And recently announced acquisition further solidify Canopy's leadership position in the Canadian recreational market. The U.S. ecosystem strategy continues to gain traction with focus to further capitalize on growth opportunities in the U.S., while they remain on track to achieve positive adjusted EBITDA during the second half of fiscal year 2022. So get that. They aim to have a positive adjusted EBITDA by the second half of next year. That's unbelievable. Now, the reason I laugh at this maintaining market share too is because, again, it's a forward-looking statement showing that during this time to that time, based on our data, this is what we concluded. And if you look at Headset.io, you can see that they're up there, but they're certainly not #1. So it's just funny how companies can make this claim to make themselves look better. But let's see what this one actually represents. So if we scroll down, unless otherwise indicated, market share data disclosed in this press release is calculated using the company's, Canopy's, internal proprietary market share tool that utilizes point-of-sales data supplied by a third-party provider, government agencies, and our own retail store operations across the country. The tool captures point-of-sales data from an average of 29% of stores in Alberta, BC, Saskatchewan, Manitoba, and Newfoundland, point-of-sale data from 100% of stores in New Brunswick, Nova Scotia, PEI, as well as depletions in e-commerce sales data from the OCS. So again, this is just based off of their own data, making them #1. So that's something that they can say based on using their own tool. But let's look at it. Fourth quarter fiscal 2021 financial results. Net revenue of $148.4 million, which is up 38% from Q4 2020, a year ago, representing gross margins of 7%. Adjusted gross margin percentage of 14%. And in this quarter, the last 3 months, they lost $616 million. An adjusted EBITDA of -$94 million, and free cash flow of -$124.2 million. So that is just too much money being lost in all directions, and that's just why I never invested in Canopy myself. So if we look at the fiscal year 2021 in comparison, they managed net revenue of $546 million for the whole year, which is up 37% from 2020 fiscal year, which is an improvement, but gross margins of just 12%, with adjusted gross margin percentage of 17%, and for the whole year, a net loss of $1.6 billion, an adjusted net EBITDA of -$340 million, and a free cash flow of -$630 million. So again, an example of them losing a lot of money. Maybe they invested in things that did not bring a return on investment, so they've had to scramble. Regardless, this is just very, very different from MSOs. And when you compare, if we go to the mjstocktrader.com, the cannabis investor portal, we look at Curaleaf, now the largest cannabis company by market cap, $10.2 billion. Canopy Growth is just behind them at $9.2 billion. If we can see, Curaleaf in their latest quarter brought in $260 million from cannabis sales alone, and Canopy brought in just $148 million from their most recent quarter. So obviously Curaleaf is the more undervalued company at this price based on what their future growth potential holds. And at the same time, if we look at Canopy, their all-time high in USD, CGC, their American ticker on the NASDAQ, hit $50 a share at one point. And if they're at $9.2 billion right now, that means when they were at $50 a share, or a little bit higher, they were close to $20 billion in market cap, when at this time they would have been making next to no money. So it's so important to understand the fundamentals and look through the business, especially relative to the market cap where they're trading at. But that is Canopy, and I didn't end up reading through all this just because, I don't invest in Canopy myself. I don't have skin in the game, but what I wanted to show you is just the numbers. So the breakdown, revenue by channel. If you look, this makes up for the Canadian revenue, the Canadian cannabis revenue, that's it. And so from Canadian recreational cannabis, they did 61 million in this quarter, up from 43.9, which is an increase of 39%, which is a good improvement. Year over year, 229 million, up from 173 million, an improvement of 32%. So when you look at it big picture that way, they are improving, likely cutting costs and increasing their revenue, so that's good. But again, just a little overvalued based on their market cap. Canadian medical cannabis, 13.7 up from 13.6. See, our market Canadian cannabis is not growing much medicinally when recreational is available and you can just go get what you need yourself. But year-over-year improvement of 51.6 up to 55.5 million. But as you can see, their international and other revenue from C3 and other gets them up to 26.5 million year-over-year, from 69.6 million to 93.6 million. So at least they are adding on other revenue streams. And then their consumer products, which is Stores and Bickles, This Works, and other, seeing much more improvement in here. Sales up, or total revenue up 66%, up from 28.4 million to 47.1 million. Year over year, from 103.9 to 167.9. So this is where a lot of the growth is coming from, not necessarily the Canadian market and selling cannabis. So good on Canopy for actually getting out there and going and approaching and getting these new revenue streams, because that's clearly what's helping spur their growth over time. And if we look at revenue by form, dry bud is where most of it comes in. As we can see in Canada, that is the trend. And it seems like, wow, yeah, so they didn't actually sell any more than they did in 2020, which is really interesting. 238 million in 2020, 238 million in 2021. But dry bud, oil, and soft gels. And here you can see Canopy invested a lot of money in beverages. That was they were the only company to really go beverage focused in the beginning, only bringing in 7.1 million. So that was a lot of money invested in something that didn't necessarily bring a big return. If we look at medical, dry bud's big, but oil and soft gel seems to take the cake here. But again, not growing a whole lot. But again, we're just wanting to show the breakdown, because we can see that a lot of the growth is really still coming from down here and not in here. So it's an interesting space. As Ontario opens more stores, it's going to be interesting, and I imagine this is going to help the sales of recreational, maybe not medical, but definitely recreational. Mind you, you can understand why Canopy, now I can better understand now why Canopy is going out and trying to buy other consumer product businesses, because those are the real revenue drivers for the company. Now, since I don't have skin in the game, I decided not to get too deep into this, but I just want to show you some other things that I noticed in the numbers. Current assets, okay? $1.1 billion in cash. A bit less, 200 million less than they had 1 year ago, $1.3 billion. Now keep in mind, in 2018, Constellation Brands, the beer maker behind Corona, invested 5 billion Canadian dollars in Canopy. So they had a lot of money to play with. And so as we can see, though, their total current assets, $2.8 billion. They have intangible assets, so about assets that aren't really worth anything, 308 million. Then they have goodwill of $1.8 million, and they have inventory of $367 million. So as much of these total assets seem high, their goodwill, intangible assets, likely have to be written off at some point. The inventory has to be sold, and as we can see, they're not likely going to be able to sell that a lot sooner. Since last year at this time, they had 391 million worth of assets, now 367 million. That's kind of crazy. And then if we go down, they do have $1.5 billion in long-term debt, up from 449 million last year. So again, this balance sheet is just riddled with extra costs hidden in there. And then I just wanted to show you, if we look at the revenue, 167 million up from $115 million, with gross margins left over, though, of just 9.8 million. So clearly they've improved and cut their costs of goods sold, because last year, where they brought in 115 million revenue, they spent $199 million for a negative profit of 91 million. So at least this year they cut those costs considerably, but gross margins of just 9.8 million after that is not ideal, not a healthy business at all, for negative diluted loss per share of $1.85. And then if we look at the year-over-year comparison, this was quarter-over-quarter. Year-over-year, though, 439 million up to 607 million. And then if we look, cost of goods sold, 430 million up to 479 million. Gross profit, again, 66.9 on 607 million. Not ideal. They have improved from last year, based on just how much they brought in and how much it cost them to make that. But this is the other thing I wanted to show you. Operating expenses, $575 million. They're spending $500 million on selling, general, and administrative expenses. Just down from $693 million from last year. Share-based compensation, $91 million, down from $320 million. But like total operating expenses, $1.3 billion, down from $1.6 billion. What is costing you this much to operate? Boggles my mind. So another reason just why I never invested. Canopy, in my view, has been a falling knife for a long time, and no doubt if legalization happens, that potential could change, but I just don't like this management style and how they end up blowing a lot of money. And I think that's really most of what I wanted to show you. Just found that fascinating. If you actually look into the numbers and know what they mean, they tell a completely different story than what the company is trying to tell you in these brief headlines. So that was interesting. Yeah, I wanted to break that down for you. But if we look at Weed Street's tweet here from Cantor Fitzgerald, appreciate you, Weed Street 420, for sharing this. Cantor thinks Canopy could close acreage acquisition before legalization with the help of Constellation Brands. Cantor believes it could be a watershed event for the U.S. cannabis industry, as U.S. MSOs would have to be allowed to uplist in U.S. exchanges. Now, I don't know a lot about Canopy, and I don't try to research into them too much. I really just try to focus on what I know and make sure, or what I'm invested in, and then make sure I know what I'm invested in, and make sure that, you know, the reasoning behind it hasn't changed. But, you know, yeah, this could be going on behind the scenes that we're not anticipating or we're not accounting for. So let me just read through this coming from Cantor Fitzgerald, calling the triggering event. So let's see what this is about. Canopy Growth has a deal to take control of acreage holdings. Our latest updated model and view post Q1 2021 results once it is federally permissible to do so. We think the company may have more discretion in making this call than investors have assumed. Yeah, likely than I have, because I don't necessarily know how much power they actually have or how much sway, and believe this could be a watershed event for the U.S. cannabis industry, as other LPs would likely follow and U.S. MSOs would have to be allowed to uplist on U.S. exchanges. Again, I don't know the technicalities of it, first time hearing this, but that's interesting. In other words, Canopy Growth may not need to wait for an act of Congress or for the DOJ to issue a formal Cole Memo 2. In our view, it will be more about discussions between the company and NASDAQ and TSX, with Constellation Brands being on board. Of course, with Sen Schumer's bill of bills soon to drop, according to Curaleaf's Boris Jordan, we assume Canopy will wait for the time being. It is hard for us to envision the company being in federal purgatory for another 4 years. Once it executes on the acreage deal, it would also likely execute on buying its 20% stake in TerraSen. So it almost sounds as if they could almost do this through Constellation Brands and not Canopy. So that's really interesting. They seem to be confident on that, but just wanted to share that, so that's interesting. And again, after those earnings, you know, they didn't drop 10 or 15% or 20% like we'd been used to seeing, so that's also a bit of a turn in the tide. This is an update from Amazon that I had to share because it's pretty awesome. This is in their update on their vision to be the Earth's best employer and Earth's safest place to work. When you're a massive place to work, there's always going to be people that are happy and unhappy, but a big takeaway from this is that today they've started thinking long term, and in addition to changing their time off task policy, we're adjusting our drug testing policy. In the past, like many employers, we've disqualified people from working at Amazon if they've tested positive for cannabis use. However, given where state laws are moving across the US, we've changed course. We will no longer include cannabis in our comprehensive drug screening program for any positions not regulated by the Department of Transportation, and will instead treat it the same as alcohol use. This is a huge victory. This is a company leader, global company leader in just distribution saying, you know, we think cannabis is the same as alcohol and needs to be treated that way. Just this is another precedent. Huge. We will continue to do impairment checks on the job and will test for all drugs and alcohol after any incident. And because we know this is an issue that is bigger than Amazon, our public policy team will be actively supporting the Marijuana Opportunity Reinvestment and Expungement Act of 2021, the MORE Act, federal legislation that would legalize cannabis at the federal level, expunge criminal records, and invest in impacted communities. We hope that other employers will join us and that policymakers will act swiftly to pass this law. So although the opioids have big pharma behind them, cannabis is now getting Amazon and big tech behind them, baby. You better believe that. Thank you for everything you do each day to help us on our journey to be the Earth's best employer and the Earth's safest place to work. Regardless, this is, you know, how Amazon can show that they are for righting the past wrong. So you gotta love that. Let's hope other big companies will follow. Cannabis rumors on Capitol Hill. So what is going on right now, since we haven't been hearing a whole lot? Chuck will have a lot to say, as he always does, but leaflet sources have confirmed that Schumer will be the gatekeeper of what ultimately goes on the floor, at least for now, and that he's committed to trying to push through a more global legalization bill before he will pivot to a smaller bill like the Safe Banking Act. And keep in mind, we want small incremental change. We don't want it all to happen at once, because then it's over. And I can't report anymore because it's done. So small incremental change is better for us investors. Schumer sees budget reconciliation, the bureaucratic process by which Congress often passes budget-related legislation, as a potential vehicle for his preferred cannabis legalization bill, and plans to bring his bill to the floor within the next few weeks. So new timeline, next few weeks, and the budget reconciliation process. This was one of those loopholes that some lawyers had talked about. That was a possible route. The draft bill itself may be released in the coming days and is likely to begin its legislative journey within the Senate Finance Committee chaired by Senator Ron Wyden. If the bill fails, Schumer will likely pivot to Plan B, the Safe Banking Act. And the votes may be there for the Safe Banking Act. Are they? Are they not? The Safe Banking Act passed the House in May of 2020 and would prohibit federal regulators from penalizing financial institutions for doing business with state legal cannabis businesses. It could also solve the cannabis industry Section's 280E problem. Now, we thought it would, but then we were told that it wouldn't because it wasn't the same bill as beforehand. Well, apparently, several senators within the Democratic caucus have made it clear that eliminating 280E is of particular importance, and the version of the Safe Banking Act passed by the House provides that revenue of a state legal business are not the proceeds of unlawful activity. This is huge. I did not know this, but if the Safe Banking Act that just recently passed provides that revenue as a state legal cannabis business are not proceeds of unlawful activity, that's a big difference than beforehand or what currently is in law now, allowing cannabis companies to take all the same ordinary business deductions their counterparts in other industries can take. Now get this is funny though. However, some Capitol Hill insiders are skeptical that this particular provision of the House version has the necessary votes in the Senate. That said, leaflet sources have indicated that there may already be enough votes in the Senate to pass the safe banking in some form. So these two sentences completely contradict one another, so we don't know what's true. One side says that, one side says the other. We're just going to have to wait and see. But while this might leave some of the industry disappointed, it would nevertheless be a substantial step forward in the fight for increased cannabis legalization. It could also set the table for a more comprehensive bill in months and years to come. So just keep in mind, these are all good steps towards something that's very, very great in general for humanity and for the freedom of people and learning about this plant. Now, as we go on, it almost seems like the forces that be told the mainstream media to start reporting positively about cannabis now. As we see from Business Insider, legal cannabis sales shot up to $17.5 billion during the pandemic as dispensaries helped Americans stock up on cannabis. Now, I'm not going to go through this all, but as we can see, they're highlighting the benefits and the facts on the ground of what's actually happening. Hey, this is a really fast-growing business. But I've covered this multiple times in the past. Another one, why the pandemic was a breakout moment for the cannabis industry. Think of how many industries went through really tough times. Cannabis was resilient was more resilient than almost any other industry out there. You could not have written that better. So just fortunate how this worked out, almost as if it's just naturally the time in history for this to happen. But again, from the New York Times, more publications writing positively about cannabis is always a good thing. And then NBC, as the House reintroduces bill to decriminalize cannabis, create social equity programs. So we're just going to jump in here and cover a little bit of what we saw released last Friday. Since I introduced the MORE Act last Congress, numerous states across the nation, including my home state of New York, have moved to legalize cannabis, Gerald Nadler said in the statement. Our federal laws must keep up with this pace. Now, so what is this new... What does the MORE Act cover since he's reintroduced it on Friday? The revised bill contains stronger social justice measures intended to address the generational effects of prohibition, including removing language that would have denied federal permits to applicants with felony cannabis convictions. It would set a 5% tax on cannabis retail sales that would increase to 8% over 3 years. Revenue would go to the Opportunity Trust Fund, which would pay for job training, reentry services, legal aid, and health education programs for impacted communities. It would also create an Office of Cannabis Justice to oversee social equity components, prevent the federal government from penalizing cannabis users who depend on social services, and open the door to more research opportunities. And the Small Business Administration would establish the Cannabis Restorative Opportunity Program to help businesses owned and operated by socially and economically disadvantaged individuals. The SBA mandate would develop and implement equitable cannabis licensing programs that minimize barriers for people adversely impacted by the drug war. So clearly it's going it has a lot inside of it that's going to help reinvest in these communities most impacted by the war on drugs, and especially investing the education and helping these people start their own businesses and become entrepreneurs in their own forms. That is so important because it's obviously individuals create the opportunity that can create jobs, create businesses, create community. And that's what we love to see. But I just wanted to scroll down here to show a real-time example of Narman Jaras, the Chief Development Officer for Exclusive Brands, a cannabis company based in Michigan, said her primary care doctor recently dropped her after she tested positive for cannabis. How ridiculous. So Jaras lives with chronic pain caused by endometriosis and prefers cannabis to harsher pain management medications such as Vicodin and oxycodone. But because she doesn't want to take those addictive pills and wants to use a natural alternative, her doctor drops her. How ridiculous is that? And this is happening to real people in America. And the more this happens to, the more this is going to change. And she highlights it. If it's happening to me, I know it's happening to others. It was such an absurd policy, in my opinion. It just shows how much work we have to do as a society. And we just constantly do this work. But again, we're making progress, folks. You gotta love it. Now, on to some legislative changes. The Nevada bill to legalize cannabis consumption lounges heads to the governor's desk. So this did pass. After clearing the assembly last week, the legislation advanced through the Senate in a 17-3 vote. Sponsored by Assemblyman Steve Yeager, the bill would create 2 new licensing categories for cannabis businesses in the state. One would be for retail cannabis consumption lounges, and the other would be for independent cannabis consumption lounges. So, in my view, this is a precedent for other states in the U.S. that want to adopt consumption lounges. They can follow this sort of structure. So, great on Nevada for taking that lead as well. And we move over to Texas, where a watered-down expansion of Texas's medical cannabis program is poised to become law. So although we didn't necessarily get more of what would have been good, we got something. And again, it's a step in Texas, at least the House bill. 1535 expands eligibility for the Texas Compassionate Use Programs to people with cancer and post-traumatic stress disorder. However, the Senate stripped out a provision that would have allowed any Texan with chronic pain to access medical cannabis. So just as an example, imagine the person mentioned in this article, if she lived in Texas, she couldn't get the medication that she needs. So thankfully, she's in Michigan and not Texas, but because for her chronic pain, she wouldn't be able to get cannabis. How ridiculous, right? So again, though, small victories. The watered down expansion did manage to, or is heading to the governor, Greg Abbott's desk after the State House voted to accept significant changes to the bill made in the Senate. I wouldn't say significant, small changes, but again, it seems like with Texas, we'll just get there over time. But an update from Illinois, which was great. The legislature passes the new bill to expand cannabis licenses. So state lawmakers in Illinois passed HB 1143 in an effort to potentially license more than 100 new adult cannabis dispensaries, which will be big for all the U.S. multi-state operators in the state. That includes Cresco Labs, that includes GTI, that includes Curaleaf, and that will also allow for opportunity for smaller time entrepreneurs to also create their own cannabis businesses and start their entrepreneur journey. So passage of the bill clears way for the issuance of licenses of 75 adult use cannabis dispensaries that were scheduled to be awarded in May 2020, but were delayed because of the COVID-19 pandemic. Measures also include provisions to support social equity applicants in the selection process for 110 additional retail cannabis dispensary licenses. So that's 75 adult use stores and then another 110 additional retail cannabis licenses. Huge. Democratic Governor J.B. Pritzker is expected to sign the legislation, according to the media report. So based on Illinois sales that we've seen, and the sales should come out on the 4th, which will be Friday, which I'll have on This Week in Cannabis on Sunday. But then if we're going to have more than 100 dispensaries added, that's just going to increase those Illinois sales. So you gotta love that anticipation and that progress for that bill to get done finally was able to pass. Next up, Green Thumb closes on acquisition of Massachusetts cannabis operator Liberty Compassion. So what does this now give Green Thumb? With the acquisition, Green Thumb now has 2 operational cultivation and production facilities in Massachusetts to serve the growing consumer demand for cannabis. Green Thumb's branded products include Dog Walker's branded pre-roll joints, Dr. Solomon's medical grade drops, lotions and balms, Incredible gummies, chocolates and tarts, and Rhythm premium flower and vapes are produced in the Commonwealth and available at licensed cannabis dispensaries across Massachusetts. The 2 Affinity cannabis stores join Green Thumb's Rise Amherst location, which serve medical patients and recreational customers. Now more about Massachusetts. The recreational cannabis market has sold more than $1.5 billion in cannabis products since launching adult use sales in 2018, according to the state's Cannabis Control Commission, with daily sales averaging around 3 million so far in 2021. Daily sales of 3 million. That's massive. Adult use cannabis sales in the state have reached nearly 443 million in 2021. There are currently over 100,000 medical cannabis patients in the state, with patients registration spiking 245% in 2020. And if we look at Florida, which was the leader, they're up to 568,000 medical patients. I believe they're the state, well, probably with the most. I don't know actually about California, so I shouldn't say that, but clearly they're one of the states with the most medical patients. Massachusetts only is 100,000, so there's so much room for growth. And again, this is selecting a healthier alternative and moving away from the status quo, which we're going to see more of that with time. Now, there's some new studies as well from Normal. This study, daily cannabis use associated with lower odds of opioid use among subjects in treatment for opioid use disorder. I believe opioid use disorder is just a soft word for addiction. I'm not sure, but seems about right. The daily use of cannabis is associated with lower odds of opioid use among subjects undergoing drug treatment for opioid addiction, according to data published in the Harm Reduction Journal. So if you want to see the study, you can click this link here. A team of investigators with McMaster University in Ontario, yay, my home province, assessed the relationship between self-reported cannabis use and opioid over the 3-month period in a cohort of 2,316 subjects undergoing clinical treatment for addiction. Just over half of the subjects in the study, 51%, acknowledged using cannabis. Those who reported consuming cannabis daily possess significantly reduced odds of using opioids. Interesting. By contrast, those that reported only occasional cannabis use did not possess the same lower risk. Researchers reported, we found that amongst cannabis users, those who use cannabis daily are less likely to have opioid use than people who use cannabis occasionally. This association was present for both men and women. Very interesting findings. So they concluded, for patients using cannabis during treatment, we provide evidence that certain characteristics of cannabis use are associated with less opioid use, including daily use. Future studies should further examine specific characteristics and patterns of cannabis use that may be protective or problematic in medication-assisted treatment. And keep in mind, like with the studies in the past, the LaGuardia Commission, Ganja in Jamaica, Ladane Commission, all these studies that looked for the negative effects of cannabis on the human body, they didn't find any. So in terms of substances that people use every day, like coffee, people use alcohol every day, and it has detrimental effects to your body. But apparently from that, and again, this is only from what we've studied in the past, we haven't been able to study much because money hasn't been spent on looking for the therapeutic benefits. Daily cannabis consumption is a lot less toxic than daily alcohol consumption, for example. So we still have a lot to learn, but again, this is just reason as to why we need to start looking for the therapeutic benefits and seeing what daily consumption actually does long term. There's been periods in my life too where I used cannabis a lot more than I do now. And, in those time periods, I was like, oh gosh, maybe I'm not going down the right path. But maybe it was just a phase of my life and I got through that and then I stopped using it as much as I did. So it's just one of those things where it depends on the person situationally, but always more to discover about this plant. Another study, the effectiveness of calming cannabis use products for treatment of nausea. The goal of this study was to measure the first time how a wide range of cannabis products affected nausea intensity in actual time. And what was interesting is that by 1 hour post-consumption, 96.4% of people had experienced symptom relief with an average symptom intensity reduction of negative 3.85 points on a 0 to 10 visual analog scale. Not exactly sure how to translate that, but system relief was statistically significant at 5 minutes and increased with time. Instantly, the effects. So, conclusions, the findings suggest that the vast majority of patients self-selecting into cannabis use for treatment of nausea likely experience relief within a relative short duration of time, but the level of antiemetic effect varies with the characteristics of the cannabis products consumed in vivo. It seems as if joint is definitely the best. So let me go up through this. Among product characteristics, flower and concentrates yielded the strongest yet similar results. So flower and concentrates. Products labeled, so that's what's going to get you more stoned, going to remove the pain more, or at least ease the suffering more. Products labeled as cannabis indica underperform those labeled as cannabis sativa or hybrid. And joints were associated with greater symptom relief than pipes and vaporizers. So in sessions using flower, higher tetrahydrocannabinol and lower cannabidiol were generally associated with greater symptom relief within 5 minutes. That's fast acting. So obviously good to see this, but future research should focus on longer term symptom relief, including nausea, free intervals, and dosing frequency, the risks of consumption of medical cannabis, especially among high-risk populations, such as pregnant women and children. So again, more research needs to be had. Thankfully, once cannabis is descheduled, we can do that and find that out. Then this is a final study, or a final article of studies I just wanted to go through quickly. Reducing opioid dependence with cannabis. Here are what 4 recent studies says. So I'm not going to go through them all, but if you want to grab the link, you can grab all of the studies down here. They are linked. So I'm just going to read the headline and then read the conclusion. Medical cannabis reduces opioid prescriptions for chronic pain. Surprisingly, the vast majority of respondents told researchers that medical cannabis had an immediate impact on their prescription opioid consumption. More than 40% of the survey participants ceased all opioid use, while another 45% said they experienced a decrease in use. The survey found that nearly half of all participants experienced a reduction in pain by a measurement of between 4 to 100%. So I don't know about you, but that sounds like it's effective and worth looking into more. Another one, a correlation between local dispensaries and a reduced opioid mortality rate. This one's hard to deny because the data is so strong, from Harvard too. Harvard did another study. Sue and Kovacs discovered that minimal increase from 1 to 2 dispensaries at the county level resulted in a 17% reduction in all opioid-related deaths, with up to a 21% reduction within the synthetic opioid category. While the authors admitted it was too soon to conclude this association as causal, really? You can't figure out a causal relation between this? Looking at past studies, especially that Harvard one, is it sure you're too scared to risk your little safe career when in actuality this would catapult your career? Because this is a big fucking deal. Anyways, they stated higher medical and recreational storefront dispensary counts are associated with reduced opioid-related death rates, particularly death associated with synthetic opioids such as fentanyl. Cannabis as a tool for treating opioid withdrawal. When it comes to anxiety, tremors, and trouble sleeping, cannabis seemed to positively impact these symptoms. But on the flip side, the yawning, teary eyes, and runny nose associated with withdrawals were made worse by cannabis use. Probably not wrong. Interestingly, women found cannabis to be more helpful than men did, a finding that we will need much more attention in the future. The authors noted that they found clinically meaningful indications that cannabis may help patients going through opioid withdrawal. More research is needed to determine exactly which situation would lead to the best results. And lastly, cannabis may not benefit veterans with PTSD and non-medical opioid use. Not all of the findings were all positive. Unlike the other studies highlighted above, which tended to demonstrate positive findings of cannabis use, the study discovered more troubling findings. I don't know if I'd say troubling, just requiring more research. The researchers found that veterans who use cannabis tended to use opioids less frequently. Yet, those same veterans also reported more PTSD symptoms, and they ended up using other substances more regularly. Even during a 4-month follow-up, the authors found that substance use and PTSD symptoms did not measurably change. This study follows in lines with other recent explorations of cannabis as a treatment of PTSD, all of which have confusing results when examined collectively. A 2019 systemic review determined cannabis and synthetic cannabinoids, both acting on the endocannabinoid system, may have a potential therapeutic use for improving PTSD symptoms, including anxiety, sleep, and memory, but a 2021 clinical trial found no significant change in symptom severity in the first phase. When it comes to cannabis, opioids, and PTSD, it's clear that more research is required, which is a good thing. But ultimately, maybe this is an indicator of how the different researchers did the research and whatnot. Maybe they need some improvement in how they ran the studies. But nonetheless, all this highlights is that we need more research. And yes, that's something we can do once we deschedule cannabis from the Schedule 1 classification where it never belonged in the first place. But it's good that we're finding more benefits. Now, this tweet from UberFacts, which was just too good not to share, and you literally could not make this up. The U.S. government classifies cannabis as a Schedule 1 substance with no accepted medical use. And at the exact same time, the government also owns patent 6630507, stating that use of cannabinoids can be useful in the treatment of neurodegenerative diseases such as Alzheimer's, Parkinson's, HIV, and dementia. Only in America, where you have perception gone so far one way from telling a false story over time, and then the reality is right here. Yet the government's preparing and playing both games, right? So the best thing you can do is try to educate yourself, because you cannot take perception away from reality for too long. It snaps back because you cannot just make a lie real. Reality and truth in the end always wins. So definitely take this as a sign. The government knows what's coming. So if you want to find a way that you can make some extra money and you want to invest in some solid undervalued companies for the long run, you know where to look. The U.S. cannabis industry is the best place and the best case for it. And lastly, this was just another great resource from from the Canadian Securities Exchange TV, from that Investing in Cannabis series. This one features Ross O'Brien, founder and CEO of Bonaventure Equity, and Nicholas Gastovich, VP of V. Gastovich Investments. And basically, you've got two very early investors in the cannabis space, Ross and Nicholas, sharing their expertise back and forth, and it's a really good interview, especially if you want to learn just how far the industry has come. Because people think this industry is new. It's been growing and building since 2013, 2014. So, it's actually not as emerging as most people think. So, hey, if you want to develop your knowledge, definitely watch this one. Tune in. It was very much worth watching. Now, that is it for today's episode, so I want to thank you all so much for tuning in. I hope you enjoyed it, learned something, and got some value out of it, so please leave a like if you enjoyed it. Subscribe below if you don't want to miss any future videos, and I will catch you on Sunday for This Week in Cannabis. Have a great day, everybody.